All right, let's do it. Let's do it. Let's do it. Happy Friday, everybody. Good morning, Paul. Good morning, Detree. Yes, happy Friday, Kings and Queens. Just went ahead and threw the link on the Instagram story to the Premarket Rundown, YouTube. We made the little relocation, but welcome everybody watching this live and via replay to the Premarket Rundown. This being our daily session every morning, 8:40 a.m. Eastern Standard Time, where we go over all the news, notes, and information, developments, and most importantly, mindset, right? To remain consistently profitable here across these crazy, crazy markets. I'm your host, Adam Holland, stock options expert and expert market strategist. And we're here to dive in and get 1% better today. That is the goal. That's the goal every day. You do that consistently. You close the gap between where you are and where you want to be, and you become that amazing person you always envisioned yourself to be over time. Right. So that's what we're looking to do today, to dive in. Hope everybody had a great night's sleep, restful and restorative night's sleep, ready to finish the week off strong. Let's see what we got going on here in terms of news. We got a short one, but I'm going to go ahead and dive in anyways. In terms of top news here, we got the digital dollar. So the crypto world has taken a beating since the FTX disaster, which reverberated through the entire system in recent months. And this week witnessed a solvency crisis at crypto-focused bank Silvergate Capital, ticker SI. However, Bitcoin up 34% year to date and Ethereum up 29% year to date. And other tokens have managed to shake off the headlines, and talk of a more centralized industry is heating up again. In fact, Nellie Long, I think it's pronounced Liang, Treasury Undersecretary for Domestic Finance, shed some light on the possible launch of a digital dollar as she leads a new senior level working group that will explore the central bank digital currencies. I feel like this is a headline that always kind of like goes away and comes back and goes away and comes back. It's just like the $1 trillion coin, right? Every time we have an issue, with the debt ceiling or something like that, people talk about minting the $1 trillion coin. So it's just one of those things that, will it ever happen? I don't know, but it continuously cycles in and out of the news. Snapshot, popularly known as CBDCs, these tokens would represent a nation's fiat currency and become notable after President Biden signed an executive order on cryptocurrency policy. Current discussions center around whether a CBDC would preserve the dollar's global strategic role with regards to the architecture of the international financial system and benefit U.S. households in terms of lowering transaction and borrowing costs. Other priorities include preserving national security, protecting privacy, and preventing illicit financial transactions. So, Liang also noted that CBDCs are only one of several options for upgrading the Fed's legacy capabilities in terms of efficiency and competitiveness. Another one is real-time payment systems like the Fed Now service, which is expected to launch later this year. There are also risks of a retail CBDC, including the potential for runs into a retail CBDC that could destabilize private sector lending during stress periods, she added. The Fed is conducting technology research and experimentation to inform design choices so that it is positioned to issue a CBDC if it were determined to be in the national interest. So, basically, it's just kind of a further push of government into the world of crypto, right? So these tokens, would represent the nation's fiat currency. So digital dollars essentially is what they're exploring. It's been something that they have been exploring, right? But this seems like kind of another step up in terms of, their exploration and their foray into this world. So it's not something, again, that immediately impacts us, but it's something that, over the course of, long term can definitely impact us. And it's just something where you keep an eye on it, right? You keep an eye on it as time goes on. But immediately, as of now, do I expect that to impact any tickers, to have any repercussions in terms of like this stock is going to move because of that or this stock? No, it's just something to keep an eye on, right? Especially for my crypto maxis. I'm sure that you've had your eye on this for 15 years, right? We know the crypto people go hard, and I'm sure they've been tracking this. But overall, right, it's just the government isn't going to let, new technology happen without getting their piece of it. And that's exactly what they're looking to do here, with this turning essentially dollars into digital dollars. And all it is, just centralized finance, but digital now. So it's not decentralized. A lot of people say that there are tons of, benefits to decentralized finance, but then there are also a few drawbacks like regulation. It's hard to regulate something that is decentralized. So it's just tough, right? We'll see kind of how everything sets up, but over the course of the next, 10, 15, 20 years, I think we'll really start to see, number one, more regulation come into the crypto sector because it's needed to avoid disasters like FTX, Terra Luna, et cetera, et cetera. Three Arrows Capital, right? Literally all of them. Insert whatever crypto firm you want there. Regulation has to come in order to make people comfortable. And we'll see, kind of how that all balances out. But right now we've got multiple timelines that are happening at the same time, and we'll see what ends up, coming out on top. How do CBDCs differ from electronic cash? When money is deposited into a bank account, the commercial entity takes responsibility for the sum. The cash is then held in electronic form and can be used across a variety of platforms, but it's limited to the bank's ledger. In the case of CBDCs, the government is the counterparty and takes liability for the money, while the ledger that's being used, known as the rails, can be a very different structure than a commercial institution. So that's kind of like how CBDCs differ from, electronic cash, because, we use a lot of electronic cash now, but a lot of people don't know the difference between, okay, if we came out with a token representing dollars, how would that vary? So that's kind of, the difference is really who's taking responsibility and liability for the money, right? The government is the counterparty that takes liability for the money in the terms of like having a, currency coin, right? Whereas now, it's the bank. So that commercial entity, right, wherever you're keeping it, is who's liable for it. In terms of outlook, seeking rate clarity, equities gained traction in the middle of the session on Thursday following comments from Atlanta Fed President Raphael Bostic, who said the central bank could be in a position to pause rate hikes this summer. Makes sense, right? We saw that, remember, the Fed spoke yesterday. We saw that we got, bullish sentiment in the middle of the day, and that's what it traces back to, right? Bostic saying that, hey, we could pause rate hikes this summer. And of course, just like, that partner that's in a toxic relationship and, all these negatives happen, but one positive happens, right? You let me eat your leftover McDonald's fries, even though you haven't been home for the past, month and a half. We grapple onto it, right? Grapple onto it like it's the biggest show of support ever. That's what markets did. So markets are like, wait, we have the possibility to pause rate hikes this summer. Pump, right? So that's what we ended up getting yesterday. Major U.S. equity averages finished higher, allowing the S&P 500 and NASDAQ to halt a two-session slide. The job market continues to run unsustainably hot, and that inflation is not coming down as fast as I had thought, countered Fed Governor Christopher Waller, who added that wishful thinking is not a substitute for hard evidence in the form of economic data. So you've got this one guy, Bostic, who wanted to come out and be super dovish, and the markets love that. But you've got Waller, who's sounding a lot more like the rest of these members of the Fed that are like, hey, the job market is still strong, right? Still hot. We can still continue to hike. And you have inflation that data showed is going back up. So it's like, I don't know where Bostic is pulling this information from, right? You and I, we might have a couple of ideas, but overall, for you to say, oh, inflation is going back up, none of the things are in place in order to say, oh, we might be able to pause rate hikes this summer. So it's just kind of like, where did that come from? And he had, other members of the Fed that hop in immediately, kind of just like literally calling him on his crap. They're like, okay, this is wishful thinking. In other words, in layman's terms, this is BS, right? You're saying like, oh, maybe we'll be able to pause rate hikes this summer. Literally based off of what? Like at one point you had inflation that was going down. Now you have inflation that's going back up. And, you still have the labor market strong where you continue to hike. None of the external factors like the war in Ukraine that's actually causing a lot of the inflation seem to be easing up. Right? None of those are easing up. If anything, the conflict is getting even worse. The conflict that we have going on with China is getting even worse. China's sending over more ships and more warplanes to Taiwan. As of yesterday, it's like all of those factors for you to come in and say we might be able to pause rate hikes is completely wishful thinking. But the market does not care, right? The market was like, I'll wishful think right there along with you. So let's see here. Rising interest rates have seen mortgage prices climb this week above their 52-week average, while recent reports suggest that Blackstone, ticker BX, just defaulted on a 531 million, that looks like euro, mortgage-backed bond. So in terms of trending news here, close call in the wake of Norfolk Southern's train derailment disaster in East Palestine, Ohio. Transportation Secretary Pete Buttigieg wrote the CEOs of the 7 major railroads to ask them to join the Federal Railroad Administration's confidential close call reporting system. Let me check back over here. All right, cool. Make sure we're still looking good. We're not blurry or anything. It looks like when I switch over is when to look at myself is when we want to go ahead and get blurry. If we could bring that back, focus in. All right, I'll let this camera worry about doing its own thing. In the meantime, as long as you guys can hear the information, we're good. But despite years of refusing to do so, Association of American Railroad CEO Ian Jeffries just replied to Buttigieg that all 7 Class 1 railroads will join the program. Specifically, AAR wants FRA to improve the quality and speed of reporting, ensure the reports are kept confidential, take steps to prevent employee misuse of the program, and share information in a more timely manner. Earlier this week, Barclays saw upside in rail stocks despite downbeat investor sentiment. So basically, what they're just trying to do is Pete Buttigieg is just trying to establish more accountability, right? They're saying, hey, whenever you have a close call and one of your trains almost flips, you need to let people know. Because at this point, it seems like there's a lot more shadiness that's going on in the railroad industry than people are letting on. Maybe things are a lot scarier, right? Maybe you have a lot more of these scares. Like unfortunately, what happened in East Palestine was just a full-on tragedy. But there are probably more near events like this that happen every year, and they're not regulated, right? They aren't made to be known. So in order to, prevent this in the future, you have to be aware of, okay, when are you having close calls? What are the circumstances that cause that? Let's move away from those circumstances instead of being like, hey, now we've got tons of toxic chemicals in people's drinking water and a population that is fully threatened for generations to come, right? This is literally people's lives that hang in the balance. Report when you almost topple your train, so we can try and not topple trains in the future. So I'm behind it, right? But in terms of tickers that could be impacted, I don't really see tickers being impacted from this, but Norfolk Southern, of course, is the one that was involved in the derailment disaster in East Palestine. So which is Ohio, right? So you can see, right, if this causes any type of movement, any type of price action that precipitates short-term, medium-term, or long-term opportunity. If you don't know how to figure out if that's the case, make sure you book a free discovery call over there on Instagram at the link in bio, right? Book that call, figure out how we get you on the path, right, to your personal profit plan, figuring out how you learn where you're at, what you have the ability to do right now, and how to plot a path forward. In terms of M&A news, game on. This was kind of big information here. So Microsoft is reportedly headed toward European Union, Microsoft is reportedly headed toward European Union antitrust approval of a $69 billion bid for Activision Blizzard, ticker ATVI. Those are the makers of Call of Duty, for those of you guys that don't know, thanks to its offers to license video games to its competitors. So basically, Microsoft set, kind of like history, saying we're going to acquire Activision Blizzard, which is another, huge gaming company. And all the antitrust, birds came swooping in saying, this isn't good for competition. This is a monopoly, But Microsoft said, hey, we're going to license these video games to our competitors. So we're not putting a stranglehold on these video games. We're licensing them to our competitors. It looks like, these regulatory agencies, like specifically in the EU, said, okay, we're fine with that. So that suggests what looked like a key hurdle will instead clear the way for Microsoft's biggest ever acquisition and set up a bigger competitive battle with Sony and Tencent. Seeking Alpha contributor, the value analyst, called the merger arbitrage opportunity in early February, noting the deal was more likely to go through than not. Bold statement, given that the Biden administration has cracked down a lot on all of these different types of merger and acquisition deals, and not many have gone through. Microsoft also apparently won't have to shed assets, which was noted in earlier reports, though it still has a way to go to allay concerns in the U.S. and the U.K. So, that's good, in terms of the EU, but like it said at the end of that, right, the U.S. and the U.K. still need to be convinced. We'll see if, Microsoft's Activision deal ends up fully going through or not. Something to keep an eye on, but those are steps in the right direction after it looked like it had fully fallen apart after it was, more so formally blocked. In terms of today's markets, we're looking more green than red, not surprising with where we finished yesterday, end of day, right? We also broke everything down for people that are in stock options made easy. We broke that down in the Q&A last night. Went over a lot of great charting. Got to get those weekly charting reps in if you want to be able to do this yourself, right? So glad that we got that session in. We've got a few members of the Fed speaking today. Today's economic calendar, we've got a member of the Fed, Logan, speaking at 11. Bostic, who was responsible for the pump yesterday, speaking at 11:45. He might have his pumping pants on again. Who knows? And then we've got Bowman at 3 p.m. Then we've got another one, but he's after 4 p.m., so we don't care about him. But overall, right, we've got the same guy who was trying to pump yesterday, pumping today. We're also encountering, weekly uptrend support here in this area. So, we could put in, depending on how we close today, a weekly bullish reversal candle, and that indicates that we're headed higher, over the course of the next month and a half. So today's close, very, very important. We'll see how we, finish out. But as of right now, in terms of Asia, excuse me, in terms of Asia, in Japan, we're up 1.5%. Hong Kong, we're up 0.7. China, we're up 0.5. India, we're up 1.5. The footy in London after midday up only 0.2. Paris up 0.7. Frankfurt up 1.1%. The Dow up 0.2. S&P up 0.3. Nasdaq up 0.4. All those are up even more now. Not much more, but still up, right? That high that we had kind of on SPY at the close, we're like marginally above that. So we'll open up slightly green. And then what else do we have going on? We already talked about the economic calendar, who's speaking. In terms of what else is happening, Adam needs to take his allergy medicine. Retail watch, blowout earnings from Macy's and Kroger. So it looks like Macy's and Kroger both came through, with positive earnings reports. Nordstrom, ticker JWN, is winding down its operations in Canada. Activist hedge fund Third Point is said to take stake in AMD. And then Walmart plans to double healthcare center footprint in 2024. So Walmart looking to get even deeper into healthcare. Citigroup cuts hundreds of jobs, mainly in investment banking. Then bribery. Ericsson pays millions to resolve breached DOJ deal. Ford set to restart F-150 Lightning production in mid-March. EV revolution. ChargePoint powers down after latest earnings. Then Seeking Alpha Marketplace author Stone Fox Capital sees only CHPT pain ahead. So again, this is just a Seeking Alpha Marketplace contributor. But they're saying that, with CHPT, they're not expecting big things from them. For you guys who might not be familiar, ChargePoint is exactly what it sounds like, right? It's an electric vehicle kind of infrastructure company where they're building these charging stations. And it looks like, their latest earnings weren't too good. And then Save the Earth letdown at Tesla, but analysts expect trouble with legacy automakers. Tesla's another one that's on watch this morning here as they got positive reports of vehicle deliveries in China. So Tesla bull flagging here, pre-market, something to keep an eye on if we get over that, 195, 94, 196 area. Something to watch here. But overall, you look clear on our end when you look blurry on your screen. Awesome. Thank you for letting me know. Maybe it's just something with my screen or YouTube Studio, but I ain't going to trash YouTube, right? Don't want to get shadow banned, whatever. But anyways, yeah, that'll pretty much wrap us up here for the last pre-market rundown of the week, March 3rd, 2023. Very important day we have going on here. Like I said, we're encountering, the weekly uptrend support. We put in a nice bullish reversal candle, and that could be a good sign. Not necessarily for next week, could be next week, but mainly for the month, 2 months moving forward in terms of us moving higher, pushing higher. So we could finally get, some interesting moves here. We didn't fully retrace that weekly downturn. We might not have to. I would have preferred that, as we talked about on the Q&A, but the market doesn't care, frankly, what we prefer. So, hopefully we just end up getting some movement with some conviction, giving us some insight into that battle between the buyers and the sellers so that we can continue to make that great money in markets, right? As always, if you got anything positive, anything, of value from this session, make sure you share it, right? Throw it in your story, DM it to people. Also, make sure you interact with the account, right? Instagram, TikTok, YouTube. I appreciate the love, appreciate the support. If you go in, show some love, throw some comments, that helps us continue to grow, continue to, kind of share the profit gospel, right? Showing people how to make their money, be the hardest working person they know, and continue to do great work. So I appreciate all you guys for popping in here, right? Investing in yourself. That's always going to net the biggest return. Have a great day in markets and have a great weekend. Be safe out there. See you back here on Monday for our, first pre-market rundown next week. Have a good one.